Independence, it's your move. Fidelity's unbiased expertise helps you understand all your options. Fidelity works with many types of wealth managers, so you can select the business model that best fits your future. Their consultative approach helps you choose how much control you want and how much support you need. Everything on your terms. After all, isn't that why you want independence? Explore new possibilities for independence at i.fidelity.com/yourmove.
How we talk about annuities and even just the basic way we frame them can have a huge impact on people's decision making. Hello, everyone, and welcome to another episode of the Advisor Upside Show. This is your co-host, John Manganero, and I'm joined once again by my colleague, Sean Aloka. It's a fun and busy time here at the Daily Upside, I would say. We've got some new team members coming on board. We're getting ready to publish some special edition newsletters, a little bit of a teaser there, and the summer's just getting started. So
we got a lot planned for the next half of the year. I'm not sure how much of it we should talk about on the pod, but yeah, definitely some new additions coming out towards the end of the year. They're going to be more of a monthly deeper dive into some topics. We got definitely have like a more of a live webinar event thing we're going to do, I think next month or in July. So yeah, a lot of interesting stuff coming up, and yeah, keep checking us out. We're here to get you great content, and it's been fun so far.
Yeah, for sure. So for this episode, it's going to be a little more informal. And Sean and I are going to be discussing some of the recent stories we've been working on for the newsletters and offering up a little bit of additional perspective and context. I love having the podcast for this to complement the newsletters because we have to be pretty selective and strategic about what information to include in the prime real estate of Advisor Upside, ETF Upside, and Retirement Upside. Quick plug, if you haven't signed up for any of those three B2B newsletters, head over to the website and get signed up. But the first topic I wanted to talk with you about, Sean, is the evolution that we've seen in advisor industry conferences. First, a question for you. Can you remember the first industry conference that you attended and what was your experience like?
Oh boy. Well, the first one I ever attended wasn't really in wealth management space. I think I went to like a Ray J women's event that they had in Boca, and it was great. It was like a 2-3 day thing. But I knew like last minute, and my editor at the time was like, "You want to go?" And I'm like, "Sure, I'll go." I'd never been to one before, but I got to meet a lot of great folks, people that I actually still in contact today, some great PR people. And yeah, I don't remember all of the content or who was there because man, that was a few moons ago. But yeah, that was a great one. And there's been plenty since. Trying not to date myself. How about you, John? What was your first?
Indeed. It was the National Association of Plan Advisors Conference back in New Orleans in what must have been 2012 or 2013. And the point that I wanted to bring up was that honestly, it was pretty overwhelming because there were, thousands and thousands of advisors there. At that point, I was still pretty much brand new to the wealth management industry. I'd had several journalism jobs before that, but this whole world of financial services was something completely new to me. And it really kind of blew me away being there on the ground and seeing all these very passionate, super smart, educated people. And honestly, as a journalist, I felt a little bit on the back foot. But, through the years, attending many, many more conferences, reporting many stories, I feel like I've learned a lot. And now it sounds a bit funny to say, but I feel like I belong at those events more than I felt like at the very beginning. I don't know if you've experienced that, Sean. I mean, it's pretty fun these days to go to an event.
For sure. I don't know how we got mixed up in wealth management, me and you, but we did. I never saw that coming. But yeah, I think the best part is going to the conferences. I mean, you can't get a better sense of what financial advisors are looking for, wealth managers looking for, than sitting in a room with 500 of them. Them listening to a keynote and the questions they're asking afterwards. I mean, that's the best way to know this business. And I think like maybe the only way really is just to go talk to advisors, get boots on the ground. So yeah, it's awesome to come and hang out with people and meet people and just learn the industry.
Yeah, for sure. And for the advisor listeners out there, I mean, it's an encouragement to send your junior folks to these events. I mean, it can be expensive. It's not always easy logistically to get people to these events. They have to leave the office and spend time time, but, to Sean's point, I mean, it's the best way, I think, to get to know the industry, and especially if you go to various events. You mentioned the Ray J event. It's obviously, if you're affiliated with a platform, going to their event is very valuable, but we've also seen some really interesting events put on by service providers. Like, I've been to Orion's event, InvestNet. I mean, those are great too. I would suggest mixing it up, and don't be afraid to send your junior people. They'll learn a lot, and hopefully come back, rearing to go. Sean, I wanted to ask you about your experiences at the Future Proof events. We had the chance to go to Future Proof earlier this year in Miami Beach. It's a super impressive event, but what's really cool about that is sort of the festivalization
Yeah.
of the events, and I think advisors really enjoy it. I mean, we're not here to plug Future Proof, but that's been a bit of an interesting trajectory.
I've been to every single show so far that they've had open to journalists since the beginning. So it's probably one of the right person to ask that. I remember when it was in Huntington and it was 1,000 people or so, or it's 1,500 maybe. Now I think it's more than 5,000 after. I guess this will be their sixth year perhaps, and then they launched the Miami Beach ones. And I've been going to every single one, and they've been great. I mean, you see the trajectory that they've been on, and I think to your point on the festivalization of it, I always thought it was interesting because we'd go to Miami or we'd go to, somewhere in California, Newport, and you could see the beach, but you were in a conference hall, like freezing, like in a suit, and you couldn't actually get on the beach. So I think that was an interesting natural kind of progression of, hey, let's get it on the beach. Like I would go, let's go on a boat next time out in the water, like kayak or something. Like let's just keep moving out of the normal spaces. But yeah, Miami Beach was really, really interesting. I know we both had the chance to get up and moderate panels. I learned a lot from those and just sitting in and listening. I think they do a great job with the content and just letting journalists in the industry get up and ask important questions to important people. And again, I think that's one of the most valuable things that you can take away from these conferences. How about you, John?
Yeah, well, I agree completely. I like to joke that the only time I've ever been sunburned while moderating a
Oh,
panel was at Future Proof. The first year, it was in March or whatever in Miami Beach, and you come from New York, still snow on the ground, and you're not thinking about putting suntan lotion on. So I got quite the sunburn while moderating a panel. So that kind of tells you a lot about the event. But yeah, really, really interesting. Really, they've doubled down on the topic of artificial intelligence, and it will be interesting to see how that plays out in the future. It's an incredibly important topic, and they're really staking the flag and trying to be the AI conference. And I'll be interested to see how that develops in the future. Whether other events, try to do the same thing. Whether AI's sort of future proofs thing. We'll see. But just more recently, I attended what could not have been a more different event, which was the Horizons event, put on by the American College of Financial Services. Very small for, I think there were between 400 and 500 people there, and they purposely set a limit and they sold out. And so there were people who wanted to go to the conference and couldn't. And there, I know Jared Trexler, their head of marketing and services, quite well. And he told me that, yeah, we're not trying to be future proof. We're trying to do something very different. We're trying to create a small community of like-minded sort of professionals. This was about retirement planning in particular, which is my beat, which is why it was really great to be there. But I was just really struck by it was a very successful event, but in a very different way to future proof. And
mm,
and my
mm,
sense of how advisor conferences are going to play out in the future is almost a barbell, where we're going to have these huge events put on by future proof on the beach. We're going to continue to have huge events put on by the likes of Orion and InvestNet, these big TAMPs that serve huge communities of advisors. That's going to be the one end of the advisor conference
yeah.
industry, and then we're going to have these other, very small, more intimate events. And I think that's awesome. There's opportunities to learn and sort of thrive in both environments. But I was very impressed with the second year of Horizons, and look forward to going back next year. Sean, I wanted to get your thoughts on this too, because in the wake of both of those events, I spoke with Sean Walters, who's the CEO of the Investments and Wealth Institute, which is one of the main accreditation bodies in the wealth management industry today. He was very candid about the challenge that it takes to bring people to these events, to keep them engaged. You have to continue to innovate, especially in a world where people can go to a future proof and sit on the beach and learn. And you have to really innovate. And Sean told me something that really opened my eyes, which was that in 2019, 32% of industry CE credit was earned at live events. That fell to 11% as of 2024, and Sean didn't have more recent data than that, but he thinks it's very possible that it's gone down. So, I mean, that's the challenge, right? Getting people to travel, getting people to leave the office in a world where you can get CE credit and great education from home. So, I don't know if you have any thoughts about that.
Well, Sean's got a great first name, and
Yeah.
I've met him. Yeah,
I think it's spelled the same.
I know they're building out events. There's events. I mean, we forgot to mention on the barbell side. I mean, you have Schwab that's going to be in Boston this year. Morningstar. I mean, a lot of
Yep.
big ones. Wealth Management Edge, which is going to be down in Boca again, which I'm going to head to and do some things there. So there's a full kind of menu of where do you want to be. There's regional shows. There's national shows. There's all different sorts of niches. And I think, yeah, what is the value prop for spending the time really to get there? Obviously, there's the flight, the hotels. I mean, I know sometimes advisors go for free, so it's not the money, but 3-4 days out of the office is expensive for a lot of folks. So yeah, what is the value that you're going to be providing? And to your point, if it's not CE credits, that's been dwindling on the live events, and I'm sure it's getting picked up on the online circuits and the webinars and things like that. So what is going to be the value? And then how do you kind of break into a very, very challenging market, a very dense, condensed market in terms of competition. So we'll see. It'd be interesting how it plays out. Yeah. I mean, how do they kind of pull out like I said, their value prop to advisors? And I think finding those useful or the providers too, finding those useful ones. I actually went to one in New York last week, and there was an attendee who said, "Look, I've been using your, I'm not going to say the name, but I've been using your tool for 10 years. Like, I don't want an AI, vague AI stuff. I want, how do I maximize the tools that I'm using with you in this session? Like, I don't want these overarching themes. I can get that anywhere else." To your point about AI, which I would say is probably not just future proof. I mean, I think everywhere you go, it's almost all AI at this point.
Yep.
You can't get out of it. It was interesting, like you pointed to, that Miami Beach was just predominantly about AI. They just kind of leaned really hard into that. But yeah,
Yep.
I think maybe the providers have the advantage of, you're using my tool. Here's how you can get better at it. Here's how you can make more money for your firm or for yourself.
Yep.
Whereas I think, yeah, some of the C and the educational ones also can lean into those educational ones. And then you also have the big barbell incumbent ones that we've had for years. So interesting to see where it's all going to play out.
Yeah. Well, I think to your point about, the value proposition of an event like this, the providers of tools, I think they have an inherent, opportunity to continue to attract people. On the one hand, you would think that a lot of that training can be delivered effectively online, and it is being delivered online without question. But for example, at the Orion event, the last time I went, it was really cool because they had like these training modules where, people were, using the tools. There was a person from Orion standing right next to them. They were talking and interacting in a very organic way that just is very hard to replace online. I mean, online training is great, but there is something to be said about sort of the classroom environment. People are a little more relaxed. They're willing to kind of joke around and kind of have fun while you're learning. And I think that's that sticks with people. And that's the thing, and this is one of the points that Sean Walters made to me, and that I've, heard about in other interviews, that, that's the thing that's really hard to replicate online is sort of the human element, the sort of jovial, fun atmosphere that really complements and accelerates learning, in my opinion. So I think, that will continue to be very, very interesting. So anyway, any other thoughts on industry events? I know it's kind of a niche topic, Sean, but we go to a lot. And so I've
Yeah.
just had a lot of
We've been
thoughts
to a
about how
lot
it's,
of them, yeah.
yeah.
Maybe too many, you could argue we've been to. No, I mean, I think you're right. I think you're right on all of it pretty much. It's extremely competitive and hard to get advisors, like you said, and it's hard to continue to have the revenue streams come in, So will we see other ones kind of start to take the lead? It's always been kind of an up and down on who has the biggest show over what years and which ones are kind of in decline. So we'll continue to see it. But it's great for the industry. It's great for the advisors, and frankly, it's great for us. So we get a chance to meet them and learn about the industry in ways we wouldn't be able to otherwise.
Yeah, yeah, for sure. So, Sean, something else I wanted to ask you about, and thinking about maybe advisors, novice advisors who may be listening to this podcast, who are maybe going to their first or second industry event, who maybe, are feeling nervous or even a bit overwhelmed. As I mentioned, when I went to my first conference, I felt very overwhelmed and wish I would have had a bit more guidance and an understanding of what I was getting into. So, what comes to mind for you, Sean? I mean, networking is powerful.
Yeah, the networking is something that you can't do online. I think you should kind of identify what you're going there to do and what your takeaways are, what makes it successful. I've seen some people like they just want to get in front of X person, or they want to, depending on what kind of firm you are, or if you're, if you're a provider of, and you want to get in front of a big broker dealer, head of a BD or something like that. So, what the takeaways are, I think in general, though, if you're just going to be there and experience it, would be like don't skip the the meals, don't skip the happy hour, even if you're not like a drinker or something. Like just make sure you're going to those areas where it's off the cuff interactions, and obviously the panels are huge, and make sure you meet the people you need to meet. But there's so many like off the I don't know, just serendipitous occasions
Yeah.
where you meet someone, they're like, "Oh, I didn't know that was you," or, you're just in the lunch line and you drop your fork and then someone picks it up and then you start talking and suddenly you have, a connection that you could have never met other than attending that event. So I think those areas are things you wanna kinda prioritize. To your point, there's so much going on. So, like, you have to make sure you hit, all those different things, but one area is like the communal things like the mealtime, or just the fun community thing that they do. Make sure you spend some time for those things too, because one, it's a nice break, you need, but two, that's really where those things happen that aren't happening anywhere else, and those sometimes almost always become the most valuable.
You can make some fantastic connections that way, and especially if you kind of are on the circuit, if you're going to these conferences, because you'd be surprised. These events feel gigantic and intimidating, but if you go to 2 or 3 or 4 and then you go back the next year, you will see familiar faces, and all of a
Oh, yeah.
sudden you'll feel like you're part of this community, and feel like you belong at this in this space that can be very intimidating. And my other tip, and this is from personal experience, I can say a little bit, is yes, you're going to this event as a representative of your company. You're there to learn in a way that will benefit the firm, and to, really increase your own expertise. But you're also there to build your own personal brand, and to, make connections, to sort of think about the long-term future. You'll discover, different companies that are doing cool stuff that you've never heard about before. And maybe you'll decide, I'd love to work for them one day. It's these sort, and to your point, Sean, like those are sort of the things you come to realize while you're sitting around a dinner table working with people, or while you're doing some of the extracurricular activities. Just keep in mind your own personal opportunity to grow from
Mhm.
these conferences. and
Right.
and I would also say, you know, don't be afraid of public speaking. It's something that a lot of people have fear of. And, very early on in my career, Sean, I was sort of asked to start moderating panels. And at the very beginning, it was so stressful and worrying. And it was something that I felt like was important to do. And I gritted my teeth and got through it. And I'm so glad that I did, because, these events, they're looking for advisors to be on panels. Even if it's not something that are really drawn to, I would say give it a try. Try to participate in a panel, and you may be surprised by how much you enjoy it, and how much opportunity flows from it.
Yeah, I remember my first one. I couldn't sleep for well, multiple nights, worrying about it. But yeah, there is definitely a kind of euphoria afterwards where this is over and that, but it's fun being up there, and you get to like it. And people, honestly, I usually tell people like no one's there to like heckle or make fun. Like everyone wants to have a fun like experience. So just be yourself, speak, you be prepared. That's the big one.
Yeah,
Make sure
yeah.
you feel good about it, and then just kind of just have fun with it. And people really tend to enjoy it, and it is great for building your own brand and marketing yourself, but marketing the company as well. And so there's a ton of great opportunities you can take away from these events.
Independence, it's your move. Fidelity's unbiased expertise helps you understand all your options. Fidelity works with many types of wealth managers, so you can select the business model that best fits your future. Their consultative approach helps you choose how much control you want and how much support you need, everything on your terms. After all, isn't that why you want independence? Explore new possibilities for independence at i.fidelity.com/yourmove.
All right, so for our next topic, we're going to let John nerd out a little bit on annuity sales tactics, which might not be top of mind, but it's actually very interesting. And John, I know you wrote a recent story on it. And I know I was at it looking at it as well. I learned a lot about how important annuities are to retirees and to just advisors in general trying to get their clients to a successful retirement outcome. There are also some kind of ways to think about annuities that might not be they're a little counterintuitive, let's put it that way. So, John, we'll let you jump in.
For sure, for sure. So I went to a conference recently and saw a really fascinating presentation by Jump AI, kind of put on in collaboration with the American College of Financial Services. There's a researcher there, Eric Ludwig, who I'm pretty good friends with at this point, and I really respect his work. But what they were looking at is whether sort of behavioral psychology tactics that work in many other contexts in financial planning, whether they function, as it pertains to the sale and service of annuities. And what they found is that really it doesn't. So there was a study in 2008 by Robert Cialdini, I think it said, and they looked at this idea of social framing, which basically is when you give people subtle hints about what other people do in a given circumstance or what's the expected behavior, that normally that does have a big effect on people's behavior and choices. So the classic study, they put placards up in hotel bathrooms and said, basically, the majority of guests in this room hang up their towels and reuse them. And they found that merely putting that message in a hotel bathroom resulted in, significantly higher reusage of towels. What didn't work was messaging like, reusing towels saves water. So it's kind of what Eric thought was to bring this into the retirement realm and see, whether this social framing effect works for the sale of annuities. What they found is the exact opposite. Social proof framing actually reduced the acceptance rate of annuity purchases by about 20%. And the only greater negative effect that occurred when in terms of framing annuities was talking about them in terms of longevity protection. That actually reduced acceptance by about 20%. So admittedly very nerdy, but I think it's a very important takeaway, which is that how we talk about annuities and even just the basic way we frame them can have a huge impact on people's decision making. And to me, that's just a fascinating finding. I think, Sean, annuities are one topic where, people's behavioral psychology is front and center. They're afraid of giving up their money to an insurance company.
Oh, for sure. And especially having that revenue stream is so important to folks too. And how do they weigh that? But I guess so the takeaway for advisors would be don't frame it like everyone's doing it. And also pick up your towels when you're in the hotel bathroom.
Yes, exactly. And what Eric actually found is that there are ways to increase acceptance with other framing techniques. So one that's often studied in behavioral finance is called default bias framing, which involves suggesting to people that a certain course of action is the expected course for people in that circumstance. So, for example, a message would be something like, "Oh, people like you who have saved $1 million for retirement normally buy an annuity." That strategy increased annuity purchase recommendation acceptance by 27%, so a big tick in the other direction. Another strategy is called consistency framing, and I think this is the most relevant for financial planners. What consistency framing involves is reminding people of repeated receptive conversations about a given action or decision. So, for example, a financial planner throughout recurring meetings can talk to their clients about the value of guaranteed income. And if those conversations are positive and people, as they tend to do, say they're receptive to this idea of purchasing annuities and guaranteeing more income, if you have those conversations throughout a period of years and then you later remind people that you've had those conversations and that they've repeatedly
Mm.
offered sort of acceptance and interest in these annuities, merely by reminding them of those conversations, you can increase annuity acceptance. In this study, it was up over 20%. What was really cool about this study is that they took Jump data, and what Jump does is basically record and transcribe conversations between advisors and clients, and they actually looked at conversations, they looked at annuity purchase recommendations, and they looked at the acceptance of those recommendations. So this is actual, data of people's real behavior. This isn't theoretical. So again, realizing I'm nerding out here, but the point is that there are framing techniques that can improve acceptance of annuities, and there are framing techniques that can improve acceptance of other recommendations. So advisors out there who haven't spent a lot of time kind of reading the latest in behavioral psychology, I would definitely recommend it. Thanks for letting me nerd out, Sean.
I never thought I'd be that interested in selling annuities, but here I am learning something new every day. So
Sean, something else that we've sort of been talking about in the newsroom, and especially obviously for the ETF Upside newsletter, is the emergence of some really interesting categories of exchange traded funds. Obviously, the emergence of spot Bitcoin ETFs has been really kind of interesting to see. Very, very fast growing. We've also seen this emergence, and they're still very novel, but this emergence of prediction market ETFs, and this is really building off the whole saga of Kalshi and Poly Market, and really just this emergence of sort of a bringing a betting mindset to the investment markets. I'm not sure if you have any high level thoughts, Sean, but to me, these products are very interesting, potentially useful, but I just wonder whether the users of these products are kind of drifting away from the tried and true investment processes and practices that we know can get people, to a decent retirement, that can help people accumulate assets and save. So I don't know what you think about them. Are they just gambling, or are they more than that?
That's the age-old question, right? I mean, what are the use cases for these? I mean, I will say the filings have came out so far. I think there's like, I'm not sure how many, to be honest, about a dozen maybe.
Yeah, a couple dozen, I
Um,
think.
yeah, so they're out there. The SEC just brought it to a public, comment period. So it's going to be a few months, probably at least, and people are going to be able to weigh in and see what they want to do with these prediction markets. I think the larger idea of just prediction markets in general. Those two things. If it is being allowed in the investment world, like ETFs are going to go, and the massive innovation that we've seen in ETFs is going to come and wrap up these prediction type investments in an easy to use tax advantage ETF. So that I think is going to happen. Is it gambling or not? To your question, I think that on the surface, it feels a lot like gambling. I mean, let's be honest. I mean, it's gambling
Yeah.
that's somehow on, an exchange and it's being, used as an investment. There's some pretty fun ones though. I wrote a story about it like a year or two ago. There was ones on um, the existence of certain exoplanets, like the obviously you can do it on political races. I even
Yep.
saw you could do one like, will a certain natural disaster hit a certain city within like a time frame, and obviously you put up your money. If it's yes, you win. If it's not, then you have zero. So I'm not in love with them, but I also try and push back when people always say it's gambling, gambling, gambling. I mean, it's not investing for the long term, and I don't think anyone would. I don't I don't think a lot of people are using these as retirement vehicles. I mean, that would be, I don't think anyone would do that
Yeah.
in their right mind. But do people want to just have fun on a race, or just testing public, sentiment on things when you see who's going to win the race, mayoral race in Chicago or something, and you see where all these bets are, it kind of gives you an idea of what the public sentiment is. So
Yeah.
there, I think it's value in just kind of almost like social listening to a certain extent. Is it a great investment? Obviously not. Are there other types of investment out there that probably aren't amazing for the long term? Absolutely. So this is just in that category.
Yeah.
You wouldn't use it for retirement. Will it end up in an ETF, and will the SEC allow it? I think almost definitely.
Yeah, I think so. That's where it's heading. Certainly under the current SEC that we have, they're very receptive to innovation, we could say, and they're willing to let investors try new products. And at the end of the day, I mean, who are we to sit here and wag a finger, right? If people go into any sort of investment opportunity with your eyes wide open, that's what's important. I think is
Yeah.
the takeaway here, Sean, is that folks understand what they're getting into, and if they want to participate, then more power to them.
Yeah, I don't think it's like the SEC or regulators really placed to kind of put, bumpers, like on the bowling alley on anywhere, and allowing people to kind of, people want to do what they want to do with their money, and it's their own money at the end of the day. If there's appetite for them, then the industry is gonna create them, and whether we like it or not. So yeah, I do think to
Yeah.
your point on education, making sure that there's, like they have done to their credit, with the leverage products, like I talked about the two, and I think there was up to 4x leverage, but on the prospectus, like in big bold letters, like usually they're fine print and you need a magnifying glass. Like in these, it says do not hold this longer than, 24, whatever the period is. So having those disclosures, yes, it's not ideal because who's always looking at the disclosures, but at least there is some kind of credibility to getting the proper information out to investors before they get, and take on some of these, I guess, more volatile or risky products.
Yeah. The one thing I have two questions for you, Sean, but the one thing I worry about is the propensity for insider trading to occur in prediction markets. We've seen that reported
Yeah.
elsewhere. It's a risk that I think the regulators do need to get their arms around. But second, I'm curious for your perspective as a fellow journalist, Sean. I mean, I actually am very intrigued by this idea of these prediction markets being, social listening devices and potentially indicators of what may come to pass. And I think there's a lot of truth to that. So, like, as distasteful as it may be to see people placing bets on disasters happening or wars occurring, it people, when they put their money behind their vote, that there's
Mm,
a certain amount of conviction there.
yeah,
Whereas I think we deal with, in the financial services industry, we read survey after survey after survey where people are kind of talking about how they feel or talking about how they, what they want or what they expect for the future. And a lot of time it's just a very theoretical exercise. Whereas I think these prediction markets, when you're forcing people to sort of put their money up to
yeah.
put a position, they're perhaps going to be more honest, and maybe the public, maybe the future is a little more clear. But I know it's a big question, but I think as a journalist, it's interesting to see these things unfolding as well.
From the political kind of races point of view, first of all, I thought that that wasn't allowed under the current rules. I thought that you can't make any kind of bets or put up money on political races. So I was confused.
I think that actually is illegal here, but people can use a VPN essentially and sort of go to offshore platforms.
I do think in that case with the political races, that might be a useful use case because yeah, you have the exiting polls, the exit polls, and you have all this data and stuff to your point. But when you're putting up money on it and you see the odds of who's going to win, like I say, a mayoral, race in whatever county or whatever city, like that, it probably is a better identifier. And when you extrapolate that to like other things, like I don't know a good example, but you can sort of use those like asset managers can kind of sort of use this data to see what may or may not happen and maybe even package some of those into some new products like coming down you use that data in certain ways that they can then package products a little bit more appropriately for what they're seeing by using the social listening. Obviously you can use prediction markets for like anything. I actually just talked to someone who's like has an app that's gonna just let anyone make their own prediction bet with their friends. It's like a social like prediction bet, like crowdsourced almost. There's no exchange or anything. It's just, and it's like a gentleman. You have to pay the guy, and he has to pay you or the woman or something. So,
We'll have to
uh,
get a poll going in the newsroom.
yeah. So I think we're going to see a lot more of it, not less of it. So I think to your point too, the regulators getting a handle on some of those insider trading things, like you did see. We saw one CEO, I forget what company was from, but he said a random word in his earnings call. And because there was a prediction bet on would he say that one word, he like swung it and he did it on purpose and used it as an example of what can
I
happen
saw that.
with these markets.
Yeah.
But you see, I think even Schwab, who at first, I mean, their CEO Rick Wurster was talking at Schwab Impact in Denver of this last year about I don't want to say the dangers, but what's happening in the proliferation of these kind of non-traditional investment products. But then they're also considering using some of them and allowing their clients to use some of these prediction markets only around financial events. I think that's what I read. So you see it just becoming very pervasive in our society right now. So again, I think we're going to see more than less, but better. I'm happy the SEC has a public comment period so they get their heads
Yeah.
around some of these issues.
Well, the takeaway for our advisor listeners, I think, is that they're here to stay. There's going to be more of them in the future. So, your clients are probably going to be asking you about them. Some may be very enthusiastic about using them, and you need to kind of have your position. Whether you support. Obviously, you can't tell clients what to do, but this is something that's out there. It's something that we need to be aware of. Definitely keep up with ETF Upside. We're doing our best to keep up with all the listings and really sort of cover what's new and exciting. So anyway, that thanks for talking through that, Sean. I thought that was interesting.
Sure, anytime. All right, everyone. Well, that's our episode for this week. Thanks for listening. We appreciate it. We want to remind you guys to also check out our newsletters. We have 3 of them now. We have Advisor Upside, ETF Upside, and also Retirement Upside, which is what John runs for us here at the Daily Upside. In addition to obviously the Daily Upside, which is our flagship newsletter with about 1 million subscribers. So plenty of content. We come out every week. As we alluded to as well at the top of the show, we have plenty more products coming out. So you hopefully you won't get sick of us, but we have some new newsletters coming out towards the end of the year. They're going to be monthly and have special topics aligned to them. So look out for that. We have like a live kind of webinar that we're going to be doing also in a month or two, which will be fun. It'll be our first time that we're doing that. We also have a bunch of videos and some other multimedia stuff coming up in addition to our new podcast. So we're keeping busy. We're having fun. We hope you're enjoying it. And thanks again, John. I'll kick it over to you. Say any final thoughts?
Yeah. Please go ahead and subscribe to the Advisor Upside Show on your preferred podcast platform. If you're only listening to the show, please be aware that we're also on YouTube. You can see Sean and I and our guests each week. If you have feedback or questions, please get in touch. You can email us at podcast@thedailyupside.com. Again, that's podcast@thedailyupside.com. My information and Sean's information is also available on the website. So if you have a news tip or want to get involved in any of our newsletters, reach out. We really want to create a community here and make this a two-way street. So I think with that, Sean, we can close the episode. Hope everybody has a good one.
Thanks, everybody.